What's going on, guys? Good morning. Welcome back. Another live stream here on a Monday. It is officially FOMC week, so you guys should kind of know what's going on. Now, just kind of backtracking here because last week I was a bit sick, wasn't able to do streams. I was just out of it. I honestly am still sick, so if you hear me keep coughing and like if I sound like a hack, it is because I'm still recovering. But I hope that all of y'all are pink in health and doing better than me. Now, based on the plan that we had, right before I delete this, obviously, we've hit this one perfectly, right? We had that pullback and then rally up into the 23.6, which is exactly what we were looking for. And now that we are in this zone with the S&P 500 and the NASDAQ, right? You can see that big liquidity grab back up to here, which has now hit our targets. We have a week in which we have the Federal Reserve making an interest rate decision, okay? And while the market is pricing in a 0% chance of a rate cut, now, based on what we are projecting and what I have been telling you guys for the past, I want to say, beginning of the year, like since January, we were talking about this, is the fact that obviously, the Fed is probably not going to cut rates until December, and in my view, probably not until next year. So the market is going to have a little bit of a scare this coming week, depending on the tone of Jay Powell, right? If Jay Powell comes out guns blazing saying, hey guys, you know what, y'all messed up, like it ain't going to happen, like, because remember what just happened last week? You had job numbers that came out as well, right? And job numbers were pretty high, right? They were a strong job market. We had more jobs created, and that's not a good thing or a aiding context for a rate cut. That's in fact a further adding to the pressure of rates either staying high for longer. That means, interest rates staying higher for longer, or it's also just another context for rates just maybe potentially increasing, right? There's no way in hell is the Fed going to cut rates with inflation so unstable and at the same time the job market so strong, right? As you guys have known for the past couple of months, excuse me, the Fed's main focus has been two things: core PCE and unemployment rate. And none of those two things have improved so far. So it is the view of majority of traders, and you can see that the bond market has kind of priced that in a bit with the yields here. But you can see that tune has kind of changed as of last week. We had the assumption that the bond market was like, oh, okay, yeah, we're going to just continue to have rates longer for higher, and then we broke out here anticipating potential rate cut. But then now the market's gone straight back down. Excuse me. So, as I was saying, sorry if I'm coughing and shit. It's just not very pleasant for me right now. But let me take a sip of water. Now, heading into just like the macro part of this, because there are no expectations for a job cut all the way till December or beyond, I think this market's going to get a reality check eventually, right? And that might come in the form of another correction downward. It might come in the form of a short correction like we had this one, right? Or it could be a broader correction where we move sideways and create a range here. So either way, we have a very simple plan here. The plan is that 23.6 extension here at 53.65 becomes your key pivot, and then the 52.80 level here, along with the 5200 level here, become your pivots. So you have this level, and this level. And the market's likely to interact with these three levels in the next couple of months, okay? If we break above 53.65, then a validation of 53.65 leads to a rally to 54.17, okay? And if we do break that, then we are likely to go and climb all the way to 5,500, which is the 61.8 extension, okay? I think personally this is the end of the year value, but I think till then we'll have a lot of consolidations and ups and downs and then eventually get up there. The second scenario is a rejection immediately of this level here, which has already kind of low-key happened, but not fully. And a further breakdown of the low of this local low, which is 53.20, and that will lead to another liquidity engineering scenario, either at 52.50 all the way up to 52.80, or if it goes deeper than that, then it will be 51.90 to 52.15, right? So this area will become a liquidity engineering zone, or this area will become a liquidity engineering zone. Now, what does that mean? That means that the market maker is currently incentivized, right, to play price action to the downside. If we can get a push up to create liquidity, what does that mean? When price action moves in a specific direction, if it breaks a pivot, what happens in this area? A bunch of buy orders will come in, trying to play the further upside. The market maker is not incentivized to let prices continue to the upside, because then they are in a delta negative environment. Because when you take a trade, the market maker has to take the opposing trade. So therefore, if you're playing the long, the market maker is increasingly short. And so they are incentivized to push the price down. And then when they push the price down, the market follows a different tune and gets bearish. Now, when everyone's bearish, then the market maker is now bullish. So the market maker's incentive is different each time. You need to understand this, okay? So the second scenario is the rejection and continued descent into 52.50 to 52.80, and then 5,200 to 52.50 roughly. These two levels will become areas at which we could potentially draw more liquidity and then bounce again, okay? So we will obviously watch this play out, and that will give us everything that we need to know. So two scenarios. First scenario, bullish scenario, which I just discussed. Second scenario, bearish / corrective scenario. Third scenario is just a good old chop, okay? A good old chop. We have a range that's been created now, so we could just chop here for a little bit, and then after FOMC, the market can make a decision. I think that's a likely scenario, but I'm not going to obviously pin it on that, right? So, and the same thing here with NASDAQ. Really no different here. Same thing. This becomes your liquidity levels at around 18,495-ish and 18,850, which is the other level. Your bullish pivot will lead to an extension into 19,427. So that's your extension to the upside. Now, IWM. If rates are delayed for a longer period of time, you can see this is the reason why small caps has not been able to lift off, right? But if they are delayed, then expect IWM to come down again into this range, all the way down here to grab liquidity at 190 again, right? So if IWM breaks here and starts rejecting 201-ish, I would be happy to play this to the downside with a tight stop loss at 204 or so. That would give me a risk of about $4 or so here, and give me a nice downside of about $10 or so, which I'm down for. That's a 1:2 point something risk to reward ratio, which I like as a trade idea. So that's one thing that I wanted to put in front of you. Second thing is if bonds can hold. If they can hold above these key levels or come back down and create more liquidity in this zone, I would be happy to potentially take that to the upside. But that's for something in the future. And then you have dollar index, which look at what happened here. So dollar index, dollar being very strong, and excuse me once again. The dollar being strong here it's going to put a lot of pressure on equities as well, right? The dollar rising here puts pressures on the equity because when the dollar is more expensive, then US denominated instruments become more expensive. So the S&P 500 becomes more expensive. All stocks become more expensive, right? And that kind of dissuades investors. And the VIX is up about 7% today, so that's a little small thing. Gold, not really going to talk about this one. Now on the Discord, I'm going to share the ideas and sector rotations that I'm looking at for this week. So if you're not a part of the member, of our Discord community yet, make sure you click on the link in the description below. There's a free option for you to join. You can join the Discord just by clicking on the link below, and you'll get access to the free channels at least. But I will be posting in the premium channels what my plan is for the next couple of weeks. Let me put about 2 of these ideas in front of you guys. So first is Tesla. And I know that a lot of you are going to be wanting me to cover this, so I'm just going to go ahead and cover it anyway. Tesla has been in a big consolidation, big, sideways movement. And there are really only 2 zones that you need to be aware of. That's between the 171 to 173. That's one zone. And then you have the 182.50 all the way to 185 and even 188, roughly. I would only like to play this if it moves into either of these zones and starts reacting with them. I was just sharing with a student of mine today during a mentorship session that it's not about what price action does in order to get to the zone, okay? You guys need to remember that it's how price action interacts with the zones. What kind of liquidity is sitting here and engineered? And that's when you take your trade, right? So a break below and a rejection gives you further downside. A break above and a bounce gives you further upside. How do you recognize those things? You have to learn the good old-fashioned way. How do you examine price action? What are you looking for? Etc., etc. Okay. The other that I really like is Goldman Sachs, right? Looks like it found its temporary top. Has been on a nice downtrend, went up for some liquidity, grabbed that liquidity, and is now potentially ready to go down for the next leg into the 61.8 at 439 or so. So this is your second opportunity of the week, which I would watch closely, right? If it breaks here, if today the market opens and it rallies a little bit, I would be happy to take a short position. Would I short it right off the bat when market opens? No. Why? Because I don't want to overpay for puts. So understand these small things make a big difference to your profitability, okay? And then comes, let's see, which one do I want to cover next? NEE. This is a trade that we took on the Discord together. Now, this trade has been running from a while, actually, since May 21st. And we have some July expiries on these. We took NEE when it was way up there, right? And since then, the trade was down 40% at some point. You'll see it, right? In fact, we played the first GS sell-off. We made a decent amount on that. And then NEE was at 26%. I took 1 quarter off my position there. Then it was down 40%, and I held it because I knew that it would reject for a second time. And then now it's at about 5% profit. This is still a really nice play because the utility sector, if you look at it, have a look at the utility sector here, XLU. It has a very bearish closing candle on the daily last week, if you look at it, right? So I like this setup a lot. And what is the biggest holding for XLU? Does anybody know? The biggest holding for XLU is NEE. 15% of the ETF is NEE. So if XLU is breaking below a key pivot, the pressure is going to be to the downside. That's going to put pressure on NEE. Okay, really simple. I like to come up with really simple trade ideas. Okay, I don't need to go and stretch myself so crazy. Okay, so those are the couple of opportunities I have for you. The rest of them will be posted in Discord. I have a shit ton of opportunities here that we're going to be playing this week. But I will want to say one thing. Okay, first things first. This is a FOMC week. And in 2 weeks, you're going to have OPEX. You have to be extremely cautious not to take unnecessary risk this week. Okay? The market's not going to make a decision or a directional move until Thursday, Friday. So just to give you guys the lowdown on what the market's pricing in. The market's pricing in a rate halt in this meeting. In the next meeting for July, okay, it's pricing in a rate halt. And then in the September meeting, it's pricing in a split decision between a rate halt and a rate cut. And then in the November meeting, the market's even more undecided here, with split between a rate halt, rate cut, and an additional rate cut. Okay? So we will know more about what the Fed is thinking about this week, but you don't need to try and guess what is happening. That is not your job as a trader. Your job as a trader this week is to actually do nothing. Because when a big decision like that is made, it's going to move the markets. And you guys know you shouldn't fight the Fed. So I would say try to be risk off this week as much as you can. Only take good A+ setups. That NEE trade that I just showed you is a good A+ setup. Okay. So for those of you that missed it, you can watch it on replay. The replay will be up right after. And if you can, just drop a like on the stream. I'd truly appreciate it if you enjoy the opportunities that I post on here. Okay, now I'll take any requests. So Broadcom is one of them. Let's have a look. I think it's AVGO, yeah. Oh, I like this. I like this setup. First of all, Barani, are you planning to trade options on this? Because I feel like the options would be freaking expensive on this. But I do like the setup though. Multiple attempts to break out. So here, obviously, your key pivot's gonna be like 1439. That's where your supply is going to be also coming in. This is where liquidity will also be engineered. I would say all up to here. So this becomes kind of like a red zone. Your demand came in all the way from bottom here. So Barani, are you thinking of what's your bias here? Like I know that you want me to go through this, but I want to know what you're looking at, what you are thinking of playing here. Yeah, I was looking to play options. They got earnings coming next week. Okay, so first of all, earnings coming next week means you can only play it up till the earnings. The earnings, you don't want to be holding the trade after earnings. Okay, so be aware of that. Now, very simple. Breakout of this level and a bounce will give you the further upside, right? Rejection of this level will give you further downside, and that would mean that you would get a pullback down to that level there. Let's go have a look exactly what that is. Somewhere around here. That would be my key pivot there. And then you have another key pivot, which is like all the way down here. So there are only 3 levels at which I want to actually play around with this. And this is the best level to play a bearish rejection play. That's the best risk to reward ratio. If you are looking for a bullish play, it has to break above and consolidate here and form new demand in order for you to find that upside. So just basing off this previous wave, the retracement at 50% would be at 1322. And if the market does kind of sell off here, and this is semiconductors, then you would be looking for a pullback into this level here. So both ways, you're kind of prepped. I hope that's helpful for you. So either breakout here, bounce for the upside, or rejection. And then your target should be 1350 first, and then second 1322, and then third 1293. That would be the targets. All right, next. Costco. So this is been in a big wave up, right? And let's see. Hasn't quite hit a 61.8 extension yet, actually. Costco looks like it could continue running. I would say something that's in a trend like this, where it's moving so aggressively hard, I wouldn't want to bet on the downside at all. There's nothing to show me that this will, you know, come down hard yet. In fact, I think a move up to 877.88 will lead to the eventual rejection here. So I would stick with the trend here, Jerome. I wouldn't want to play the downside just yet. I don't want to take a rejection play. I don't want to take a short play, because it can just keep moving further up. Airbnb. Okay. Airbnb. Upside. I mean, it's not a bad idea for the upside, but I think it's also consolidated here for a long time. So, this is not nice. So the thing is, like, you kind of have a weird, like, you have a weird trend line thing going on here. That was the inverse head and shoulder, broke out eventually, then rallied up. Now it's forming a mini hit inverse head and shoulder on the 1 hour. Here, okay, very simple. Drill it down to the 1 hour time frame on Airbnb, and then your pivot becomes this level here. Okay, there is obviously this level as well, but I don't like it as much. Up here. Okay, so that's what you need to get through. Downside pivot is going to be around, let's see, around here. This is an abnormally, so I wouldn't want to play this level at all. So Airbnb needs to break 148 or 149.50. It needs to break this strongly for upside. Okay. Okay, so by the way, by playing this to the downside or the upside from where it currently is, will make you lose money. Okay? Because no matter how you play this, if it moves up, you're risking this. If you're moving down, you're risking this. So here, the risk to reward ratio is 1:1. I would hate to take this trade right now. You need this thing to either come down and be here for you to take a trade, or you need it to move here and break this to take a trade. So this is a non-trading ticker right now. Okay, you don't trade this right now. It's not going to give you any benefit. There's not enough risk to reward for you to play this trade. Okay, Darren. So I wouldn't take it just the way it is. I would wait for either a pivot here or a breakdown here. Thanks. This was the reason I want you to cover the ticker, because it looks too. This is the reason I want to cover this ticker, because it looks too consolidated. Yeah. So you want to wait for either a move below this or above this, because then you would have some momentum. Here there is potential liquidity that it can grab. Here there's potential liquidity that it can grab. And that's how I would play it, okay? Because then you would have these levels here, and you would have these levels here. So that's how I would want to take this, okay? All right, any other tickers that y'all would like me to cover before I hop on the live trading session with the team on Discord? Remember that NVDA had a stock split, so it's not a bug that you see at $120. Okay. MSTR. Okay, so I've seen some flow about this, by the way, in our Discord. MSTR. I saw. Let me pull it up. I know that it is here. MSTR. Swear I saw it. Okay, no, maybe not. Okay, with this one, pretty dependent on Bitcoin, but I do like the potential inverse head and shoulder here forming. It doesn't need to come down here specifically to form that shoulder, the right shoulder, but if it does, then well and good. But the neckline is going to be really awkward because it's going to be like here, kind of. 1738 above, it gets a potential rally to 2000, which is the high here. And 1442 is another pivot here, which then will lead to a downside slide into, I want to say, here. Yeah, here. So you have these pivots here. Now, with this, it's going to mimic Bitcoin price quite a fair bit, because I know that this is a Bitcoin related stock. So there is a little cup and handle formation here. I don't know if you can see it so far, but you kind of have this thing going on where you have this and then you have a channel, right? Pretty much a channel here. So your pivot is going to be this and this. Where you are, there is no trade. Once again, upside, downside scenario, 1:1. No nice risk to reward ratio. You need a break of either this or you need a break of either this to make a decision. And you have to see if liquidity gets engineered here and here in order for you to make that decision too. So I would let this marinate and see how it kind of plays out. But you have a lot of potential here. Alrighty, well, I hope that you guys found this live stream helpful, and I'll see you back on Wednesday for the next one. Peace, love you all, and take care. And bye.